Good morning and welcome to MasterTrader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. We're going to take a look at the broader markets after this big event and this move down that's happened over the last few days. And the way prices have moved down is a reinforcement of what I've been teaching traders and investors for years, that the only thing that matters as far as support is what's real, and that's where people put their money, and that's what creates these areas on our chart that we looked at them in a candlestick format or a bar format or any format that you choose. Those that draw lines called Fibonacci retracement lines, where they connect dots from one point to another, they found that those lines meant absolutely nothing as prices slice down through them like they weren't there, because they're just imaginary lines in their mind. The trend line drawers that connect dots diagonally and project them into the future with some pre-notion that they're going to create support or resistance, another fallacy within the market. The only thing that matters is where people have put their money, and the selling was so extensive that those areas stalled intraday and then continued to go through it until they reached the next area, which was down here where all the bottoming tail bars were, and a reference point called the 200 period moving average. This is a simple moving average. It's widely followed by institutions, and that was aligned with all the bottoming tail bars. And that's where the buyers came in the middle of the night and started pushing prices higher. Keep your analysis simple. Remove the lines that you connect with dots, and the Fibonacci lines and the Gann lines and the speed lines and such. Of all of these subjective reference points, simply look to the left and see where the money stepped up to the plate in the past, and that's where they're going to try and step up again. At that point, you wait and see if demand picks up and begins to take hold. And this is what began to happen last night as prices pushed down a little bit lower into this area there, and then prices began to rally from there. They reached a resistance area, and now they backed off, and they're beginning to stabilize here again. And we've got this big bottoming tail bar on the futures. We'll see where this shapes up into the open, but right now buyers are stepping up in this area here, and I think the open will be whippy, and in all likelihood what we're going to see over the next several days and possibly weeks is a retest of this area as prices whip back and forth to test it. Now what happens is we look at market internals, and as I've shown you over the last few weeks, that sentiment reached an extreme, and there were too many betting that this market was going to go higher. It was actually a point where I made a note where they said on CNBC where they were looking for the S&Ps to possibly go to 5,000, and that was a big warning sign right there. And this was in the area where we got what we call the breakout bar failure pattern, which I've taught hundreds, if not thousands, of traders over the years, and I actually wrote an article on it last night in the middle of the night and sent it out as a chart of the week. You can go to the website, MasterTrader.com, look under chart of the week, and you'll see the article there, and I'll show you the pattern and explain how you can use it to save yourself from a disaster like this. Now, this breadth internal historically has reached a level where the markets have always bounced from, and that's what's happening. What will happen now is that the markets will hold here. They'll eventually come back down. They may actually break that low, and then we'll be looking for a bullish divergence here where there'll be some relative strength, and those are the stocks that we'll find here at MasterTrader that'll be leading the market back up again. Now, the angle of retracement here is very steep, and it's going to take some time to repair the damage and bring certainty back into this market. So be aware of that. Don't be in a rush to get back in. If you're a longer-term investor, day traders are going to find opportunities here, but what we want to see is on that retest these option traders where the sentiment reaches actually a bullish extreme, where they're betting that the market is going to crash. And that is where I'm going to get our subscribers into positions from an intermediate term point of view when things line up historically as they always have and present us new opportunities to make money. Good trading, everyone.